So we're going to see a stock market crash before 2023 is what you're saying.
Yes, between now and late. Now, remember, the stock market's a leading indicator. So I expect the stock market peak right here, I'd say by somewhere between early December and mid-January, we see a peak, and I think more early side, and we see a 2-year crash that really continues the crash that started in February.
So this is not a crash, or if you want to call it a crash, a major sell-off like we saw in March, where that just rebounded right away. This is a structural downtrend in the equities markets.
Yes, it's a reset for the greatest financial asset bubble in history, partially caused by a good economy at first, like the Roaring '20s, but greatly goosed up by central banks artificially, and the fact that, yes, the demographic trends here and in East Asia and in Europe, all the developed countries, continue to get worse, especially in the next 2 to 3 years. So yeah, no easy recovery from this. When the stock market realizes that, yes, I say we have a reset, and then stocks can grow again, then real estate can grow again. And then the millennials are going to be the biggest beneficiary if we get this debt and bubble out of the way, because it's stymieing investment and productivity.
You say that the stock market is eventually going to realize the economic condition that we're in, but why haven't they realized it yet? Why haven't equities investors, what you're saying about the economy, it's not really news. We know that the economy is in terrible condition. We know that monetary stimulus is has been the primary driver of equities prices. Why haven't people realized that yet? We're still seeing the Dow at 30,000 points.
I am surprised, David, because how long does an economy have to limp? With this level of stimulus in the past, you would have had super growth and inflation, both. And we have neither. I think that we're about to see one more crash. It won't be the end game, but it'll be one more crash that takes the stock market to new lows by April, is my forecast. Between now and April, another 40% crash, greater than the S&P down 34, 35, greater than the 20% crash for that. Ever since 2018 top, which was the first bubbly top, we've seen every crash take us to new lows, but every stimulus rebound take us to new highs. I think we're going to see the high soon, and we're never going to see this high for years. And that the next crash is where investors lose confidence in the Fed and governments endlessly stimulating a dead economy. Globally, 255 trillion in debt, way more than 3 times GDP, way more than ever, but financial assets, because of QE, is twice that, over 500 trillion now. Just that financial asset bubble crashing will take 200 trillion or more out of the global economy, 3 times GDP, and that is enough to cause a depression without anything else.
We're looking at possible triggers for this crash. We've been seeing nothing but good news out of the economy for the last couple of weeks. Vaccine, stimulus, data points to recovery, maybe not to the same extent as pre-COVID levels. I just don't see a trigger here. Help me out.
Yeah, I think it's going to be continued disappointing data. Now, I just said Moderna just said something this morning. The head medical director in the stock market totally ignored it. He said, wait a minute, folks, you don't understand. This vaccine is proven to reduce the severity, to make it, if you do get this, it's going to be it may be a nothing burger or less severe. That's what it's proven to do. It is not proven to stop transmission yet. We hope it does, but it's not. What if you get more announcements like that? I mean, the stock market ignored this morning. Yeah. The stock market quickly ignores bad news and jumps on any good news. The vaccine, up 6-7%. Moderna says this today, totally ignores it and goes up anyway.
Yeah. Haven't we seen that bad news is good news? When we have bad news in the economy, that just encourages the Federal Reserve to stimulate more, right?
Yeah.
Would that be a factor you're considering?
Yeah, but you got to look at the ECB and the Fed lately. They're saying, okay, folks, we have more than done our duty here. Fed just printed $3.4 trillion since the repo crisis. Repo crisis was the first warning sign to me. The banks cannot survive without constant QE. The Feds keep saying, we just needed to get over this 2008 crisis and we'll be okay. 10 years later, they pull back the stimulus just a little bit, 2017, 18, and then the banks go illiquid and need funding from the Fed to keep alive. That shows the banking system's weak. Every time you pull back stimulus, the economy slows. It shows the demographics is weak. We're weak.
What about monetary MMT, modern monetary theory? Are you a subscriber to that theory that the Federal Reserve can continuously pump money without repercussions of inflation?
No, that would say that everybody's missed all of history. Everybody's wrong, and you really can get something for nothing. This is exactly, David, what they say at the top of every bubble in the 29. That Irving Fisher, the leading economist in the country, says we've reached a permanent plateau of prosperity. We've gone to heaven. We can just die here. This is what happens. You cannot create growth by just constantly printing money as if work ethic, technology innovation, and all these things don't matter. Hey, we've seen our technology innovation from the internet cycle. It has peaked and is declining. We've seen the incredible spending and productivity of the largest generation in history. It's declining. We're only living on short-term free money, and it has diminishing returns. That's important. Diminishing returns, just like if somebody's addicted to anything, let's say crack, heroin, you take it, coffee. It takes more and more and more to get the same high or to keep from coming down until you die from stimulus. You die or hit the pavement and go to rehab. So what I'm saying, this downturn would be the best thing that happens. For 2 to 3 years, we go through a big, let's call it a detox, deleveraging of debt and financial asset bubbles. When you have all these people putting money in bad debt and bubbles, you're misinvesting for the future, and you're killing productivity, which we've done nothing but seen declining productivity. And money velocity, David, tells you how productive you're investing. That's been declining since 1998, like it did from 1918 to 1932, which ended in a Great Depression. I would say if we see another new low in the stock market, I would predict we are not going to see new highs on the Dow, S&P, NASDAQ, biotech. You pick anything but maybe kind of somewhere down the line, Bitcoin. You're not going to see new highs on anything for decades, because you didn't see new highs after 1929 for 24 years in 1953. When you get this big a reset from this big a bubble, that's what happens.
So 1929, you're comparing us to the Great Depression. We're in a depression right now, is what you're saying. I'd like to ask you one more question before we talk about gold, about the economy. You studied Japan in the late 80s and 90s. Now, if I remember my economics history correctly, what happened in Japan was a period of steady deflation. Consumers put off their big ticket purchases in anticipation of lower prices, and that created a feedback, that created a self-fulfilling prophecy.
Well, after the crash, what caused the crash was they had a bubble. People don't realize this. They had an incredible bubble in real estate. Tokyo was worth more than all the real estate in the United States for a brief period of time. I was telling people this cannot last. Their stock market bubbled up just like ours has, when the rest of the world didn't at that time period nearly as much. Okay, so they had a big bubble, but they were the first baby boom to peak. Their births peaked in 1949. Ours peaked in 61. Europe 64. They peaked ahead of us, so it wasn't just the bubble bursting. It was then, but now there's no people to spend money anymore. Their generation, they bought all their homes, borrowed all their money, raised their kids, and guess what? The devastation's been so bad in a zombie economy for 30 years that young people now don't even want to date, nevertheless have sex or get married and have kids. So their demographic decline. Mark my words on this too. Into this year, 2020, yes, was quantitative easing, 4 times as much as us relatively. Yes, it was Abe's arrows and fiscal stimulus, but it was the millennial generation in Japan, which guess when they're peaking? Right now. 2020 is 1989 for Japan again, and they're going to see another generational decline take them to new lows in demographic. Japan is never ever in my lifetime or yours see the 1989 39,000 Nikkei top again. They only gotten about 60-70% there now. They will go to new lows in the next few years and never